The purpose of us creating the buckets is to take what is otherwise complex, what seems like a lot of decisions to make, and really distilling it down and making it simple. And we want to create these frameworks and these buckets in a way that gives clients a really clear understanding of every single asset that they have and giving a purpose statement behind each of them. It can be really confusing if you're looking at a balance sheet or a net worth statement and you're seeing a number that's there and you're asking yourself, is this going to be enough? Am I going to be able to pass on the dollars that I want to? Can I give to these organizations that I'd like to? Even to just very practical decisions around, we're taking that trip to Europe. Is it okay for us to move up to business class, or have we already spent the dollars that we should be for vacation and we need to, spend that flight in economy? And so it becomes our job to create these frameworks and to have specifically the buckets that allow us to be able to understand the purpose of all these assets. As far as the buckets go, we typically have 6 of them. Now, what we're going to do is we're always going to customize to the clients. And so it's not to say that these 6 are always the 6, but the ones that we find that need to be in place most often, we start with what we would call lifestyle and fun. These would be the dollars that the clients are going to need over the course of their lifetime. And so if it is a family of a husband and wife, as an example, what are the dollars that they're going to need for the rest of their lifetime? Most clients have never done the hard work to understand the amount of dollars that need to go into that. We like to break it down between 2 different types of buckets there. One would be what we call lifestyle, and the other would be the fun bucket. Unsurprisingly, that's typically the one the clients enjoy the most of the 6
I can
buckets.
see it.
Yeah. So within the lifestyle, that's going to be for just the everyday expenses that people are going to need once it's time for them to live off of their assets or a portion of their assets. And so, everything from their property taxes to buying their groceries, gas, all the things that are just needed to live everyday life. There's going to be an expense to that. It's probably going to grow over time. We want to account for that, right? That would be the lifestyle bucket. The fun bucket would be for the dollars that the clients are able to take and enjoy. Something that we believe at 49 Financial is that these clients have worked really hard for what they have. We think it's such a shame for them to get to the point to where they've put in all of that work, all of that effort. They made wise decisions to be able to save and be prudent with their finances, and then they just don't enjoy it. It's all for other people at that point. We want them to be able to really enjoy what they have. And so let's just be smart about it. Let's have a budget and have a clear dollar amount that we're setting aside for them to be able to enjoy. And then one of our favorite things to do is to run reviews with them and actually hold them accountable to spending that. That's something that our clients tell us is, look, I'm somebody that, the fun bucket, we've got to really rein in and make sure that we're keeping it where it needs to be. And then there's others that the accountability they need is to actually go and enjoy. And so that's something that we consistently are doing for our clients. With the investments that we have in the lifestyle and fun buckets, those should be more predictable in nature. They should be boring. I wouldn't hear boring to mean not competitive. There's certainly ways that you're able to invest those and get competitive rates of return. But those are the dollars that you're going to be needing for the rest of your life. You need to make sure there's a lot of predictability with it. And again, that gives us really clear understanding of, well, then what assets should be going into these lifestyle and fun buckets, and how does that tie back into the frameworks that we're creating for our clients? The third personally focused bucket is what we call the new ventures bucket. So new ventures would be for the investments that are not, again, more predictable in nature. These are typically going to have more risk and more potential return for them. Our hope is that these are some of the best investments that clients make. But again, we've got to factor in the risk component with it. So whether it is an overly concentrated position you want to take in a stock, or whether it is an IPO that you want to invest in, or maybe some other real estate deal that's out there, all of that would fit into our new venture bucket. We want to start by filling lifestyle and fun bucket first. We want to, what we would say, put our mask on first. If you're to get on an airplane and the masks come down, what are they going to tell you? They're going to say, put your mask on first, because you can't be much help to other people if you yourself aren't taken care of. So let's start with lifestyle and fun buckets. And then from there, with the additional dollars that we have, well, then new ventures may be a great place for us to invest.
So you effectively don't figure out if you even have a new ventures bucket until you can do all of the customized math on lifestyle and fun. And then and only then is there any left over.
Yeah, so it's going to start with understanding with each client, what are their goals? What are their values? What does it look like once they are living off of these assets? Everybody's going to have a unique situation. Some people will have no income coming in retirement other than maybe something like Social Security. Others are going to have other forms of income. Again, these frameworks allow us to build in the flexibility to be able to customize that to each client. And once we have a clear understanding of this is the dollar amount that we're going to need, and then let's back into here are even the specific assets, looking even down to a micro level of from a tax standpoint. How are we going to make all of this work together in the most efficient way? Once we have filled all that up from a lifestyle and fun bucket, that's where we're then able to take next steps with the new ventures investments.
So good. Why is it so powerful to put your mask on first as it relates to the planning when it comes to others focused?
Yeah, once you have a clear understanding of what you are going to need over the course of your lifetime, so we've filled up our lifestyle and fun buckets, it then allows us to say, we're going to be good. And we also have a desire to pass on dollars to our family or to charity, or one of the things that we're going to need to think about for some clients is estate tax planning. And so by understanding that you have put your mask on first, you have taken care of yourself, you're in a good spot, it then lets us transition to how can we maximize what we are passing on? How do we put ourselves not in a defensive position around all this, but we want to be on the offensive. We want to be taking control around our planning and building out, for example, an estate plan that not only passes on assets, but gets really clear with what is the most tax efficient way that we're going to pass on those assets. How do we make sure the government is getting as little as possible? And how do we design an estate plan that doesn't just focus on the dollars, but actually builds in and accounts for what values are we wanting to pass on? What priorities do we want to make sure that future generations of our family, what continues to be true for those future generations? So all of that is accounted for within these other focus buckets.
So what are the others focus buckets,
Yeah.
and how do you choose which one you do first?
The others focus buckets are protection, legacy, and generosity. So from a protection standpoint, a good financial planner does not just design a plan that should work. They also look at what could disrupt this plan and what are the things that we need to do to actually protect the plan.
Yeah.
And so that could be done a lot of different ways. There's some clients that have a belief that they have the funding to be self-insured, and they do. And that's something that you need to build into the plan. There's others that it makes more sense to leverage a company like a life insurance company or a long-term care company and using them to help mitigate the risk. And so we start by understanding what could disrupt the plan and what does it take for us to make sure that we're protecting it. Once our clients are in a good spot, once we have protected the plan, then we're able to move into legacy and charitable planning. That's going to look different for every single client. That's not something that there's just a rule of thumb of what estate planning or charitable planning should look like. That's where it becomes really important to ask good questions and know and understand the hearts of the clients, their values, and ultimately, how do we then design a legacy and charitable plan that accomplishes those things for them.